Today, we will talk about leveraged ETFs, the potential for bigger gains and bigger losses. A leveraged exchange-traded fund is a marketable security that uses financial derivatives and debt to amplify the returns of an underlying index. While a traditional exchange-traded fund typically tracks the securities in its underlying index on a 1-to-1 basis, a leveraged ETF may aim for a 2-to-1 or 3-to-1 ratio. ETFs are funds that contain a basket of securities from the index they track. A leveraged ETF uses financial products and debt to magnify gains, but it can also lead to significant losses. It is important to be aware of the risks of leveraged ETFs since the risk of losses is far higher than those from traditional investments. A leveraged ETF might use derivatives, such as options contracts, to magnify the exposure to a particular index. Leverage can lead to significant gains, but can also lead to significant losses. Investors should be aware of the potential risks involved in leveraged ETFs. Along with management and transaction fee expenses, there can be other costs involved with leveraged exchange-traded funds. It is important to consider the fees associated with leveraged ETFs and compare them to other forms of margin trading to make informed investment decisions. Leveraged ETFs are typically used by traders who wish to speculate on an index or to take advantage of the index's short-term momentum. Due to the high-risk, high-cost structure of leveraged ETFs, they are rarely used as long-term investments. The Direxon Daily Financial Bull 3X Shares ETF holds equities of large U.S. financial companies by tracking the Financial Select Sector Index. It has an expense ratio of 0.96% and aims to provide investors 3x as the return for the financial stocks it tracks. This example illustrates the potential for large gains or losses very quickly for investors in leveraged ETFs. Here are 2 key takeaways. 1. A leveraged exchange-traded fund, ETF, uses financial derivatives and debt to amplify the returns of an underlying index. 2. Leverage is a double-edged sword, meaning it can lead to significant gains, but can also lead to significant losses. Hope this would help. Thanks for watching.